All right, y'all. So, quick analysis. Market is about to open. So, as we can see here, we go on the hourly and the 4 hour. There's not really any draws on, well, no, there's draws, but there's no clear bias for the day. And that's usually the days where I stay away from. I mean, this is a kind of a clean PD array right here. This 4 hour bearish fair value gap. We are delivering from it. And as you can see, we're disrespecting bullish fair value gaps and respecting bearish fair value gaps. So we are kind of trending downward. Now, I did notice something on the 15-minute that I think we need to be paying attention to. So we do have multiple stacked highs right here. And I do think we're still going down, but these are kind of hard to ignore. These are very hard to ignore. So, market just opened. As you can see, we're probably going to trend up into this. So, I think I'm going to switch my bias for the day. And I think my bias is going to be bullish, even though we are trending lower. Yeah, there is some draws on liquidity here, but these are just too juicy of stacked liquidity to ignore. So I'm gonna probably take a gamble today, but we will see what happens. So I'm gonna mark everything out. 15-minute. Gonna mark out some 15-minute fair value gaps, and if we straight run through it, then I'll know that we're gonna go up. If we don't, then we're probably gonna target those lower. We're probably gonna target these lower liquidity pools right here. So we will see. It is Friday, so market might be choppy, but that is why it's important that you don't trade if you don't see your setup. You know, very important that you don't trade when you don't see your setup. Because if you do trade and you don't see your setup, you're pretty much gambling, and that's not what we want to do. We don't want to gamble. So, as you can see, market is kind of choppy. Here's another draw on liquidity. As a matter of fact, we have London lows right here. If we go on the 5-minute, remember guys, don't trade before 9:45 because 9:45 is straight manipulation. Maybe we draw into this 15-minute fair value gap. We could. If we close above it, then I'll probably take longs all the way up here. And if we don't close above it, I'll probably be looking for reversal trades into these lower liquidity pools because this is the bias. We're trending down pretty much. So we will just have to see. What's the S&P doing? S&P, we have a draw on liquidity right there. I will definitely be watching out for that because we could possibly sweep liquidity on one of these indexes, form an SMT, and go straight up. So I'm definitely looking out for these draws on liquidity right here. Boom, 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 boom. These are just too stacked of draws to ignore. I know the market wants to go up and take those. So we're going to see what the market does. We might manipulate down. If we do, I'm going to look for a reversal all the way up into here. Hopefully today turns out a banger day, so that way we can end the week on a banger note and we just go crazy. Market is moving very slow today, and this is exactly what I predicted for Friday. It is important that you see volatility. If you don't see volatility, don't trade. Market doesn't know what it wants to do. It has a bunch of highs up here, but we're obviously trending down. So as you can see, we have a bunch of indecision candlesticks right here. Doji candlesticks. The market don't know what it want to do. So we will have to wait and find out. Catch the real big move. If we see any type of consolidation, no trade. So guys, we all know how to trade, but we don't know how to not trade. And that is a big skill that we need to develop in order to become good traders. We got to know how to not trade. It's important that you know how to not trade. Because if you know how to not trade, you're forming a habit, a good habit that you need to form. If you're trading on a day that you're not supposed to be trading, you're forming bad habits. You're thinking emotionally, your psychological is all fucked up, and you're forming bad habits. And remember what I said. Trading is skill building. Trading is not gambling. You're not gambling. You're not going to the casino and gambling your money. This is skills. This is systems. So it's best to honor those skills and systems and also play the probability game. If you trade 5 days out of the week and each trade is a high probability trade, your probability of making money is going to be significantly higher. But 3 of those days, if you're just gambling and throwing your money away, you think you're going to be making any type of money? This ain't the Mega Millions jackpot. Looks like we're about to form an SMT with S&P and NASDAQ. So I will be marking this out. Like I said, I think our draws are up here. So as soon as we touch this liquidity pool right here, I think we're going to fly up. So yes, I will definitely be taking buys all the way up here. we just have to see and wait. I'll probably take some buys on the S&P, since this is the trailing trailing index, the late index. NASDAQ probably just wants to go up. We're waiting on S&P to sweep this low out, so that way we form that SMT and start going up. Let me open the trade. Buys 6, 7, 10. Six, 7, 1, 10. Just want to see how much money it'll. 6, 8, 5, 0. Oh no, not that much money. Let's do 3 contracts. Nope, 2 contracts. That's a little bit better. I like that. Unless we retrace up to here and go down. But the market is moving way too slow today. I don't know. It's moving too slow. I don't think I'm going to take a trade today. I don't think I'm going to take a trade. I promise you guys, discipline in the end will reward you. It will reward you. Stay locked in. Focus on strategy. Do not focus on the numbers. There's a lot of numbers going on. Can't focus on the numbers. Can't focus on the numbers. See if we can see here. Hold on one second. Okay, what did the S&P do? Did we sweep? No, we still didn't sweep. So we're starting to trend up. And we only moved 100 points. Let's check the 1 minute. Let's see what we're doing. Yeah, we're pretty much chopping around. We don't know what we want to do yet. Might call this an early video. I don't want to risk trading this. It is too choppy. It's moving too slow. And this is not the best. This is not the best way to trade. Trading in a range, in a consolidation range like this, that's moving this slow, It's like the market, there's there's not a lot of big time investors into the market, meaning that you could just be getting chopped around once you place a trade in. And when you place the trade in, the market could move so slow that it could take 30 minutes for it to hit your take profit or stop loss. So you'll just be sitting there waiting in an emotional state. That's gonna mess up your emotions. One of my biggest, well, my biggest, the only time that I lose is when I get caught during consolidation. That's what I know. That's what I notice. That's the only time I lose, when I get caught in consolidation. The reason why I get caught in consolidation, though, is what I just remembered, is because the market is moving so slow that it doesn't know what it wants to do. This is the exact reason. Once you see this, you don't see a direct direction of where the market wants to go, because it should be going like this, boom. If it was still going up, we would maybe come down a little bit, then continue going up with rapid speed. We should be like maybe up here right now, or all the way down here right now, sweeping out liquidity and reversing. But it's in a range. You see how we reject up here? We're rejecting all up here. You see these long wicks? These are rejection candles pretty much. We're rejecting this price range. We're coming up here quickly and we're just going right back down. Over here, we drop down. Obvious liquidity target right here. But the market didn't want to do that. It just wanted to go right back up. And now we're just... This is pretty much what we're doing. You don't want to be trading during this. If the market is doing this, you stay away from the market at all costs. Don't try to do no type of, I mean, unless you're a scalper, then that's different. But if you're a day trader, you shouldn't be trying to trade this. This is bad for business. This is no good. No good. This is where discipline comes in. This is where controlling your emotions comes in. This is where your psychology comes in. This is also where skill building comes in. Like I said, we have to learn the skill of not trading. Learn that skill of not trading, and you will become a better trader. It just goes hand in hand. It's a very inverse logic, but trust me, it works. It's like reverse psychology. Learn how to not trade to become a better trader. It's simple. Very simple. This is an obvious 15-minute fair value gap that we could have hit, and we still didn't even hit this. Like, yeah, you could say it's close to the fair value gap. It's close enough. But is it really close enough? This is where your psychology comes in. Do not fast forward your trades, because you're going to get caught. Wait for the confirmations. Wait for the real confirmations before you make your move. I'm telling you, in the long run, it's going to work out. Do not chase the market. Remember, don't chase the market. Let it come to you. As we can see, the market is not coming to us. We're in a range. We're in a range. A range that I don't think we're going to break. It's Friday. It's usually not really the best time to trade in terms of volatility. So I like to stay away from Fridays, but I still want to make this a video to give you guys a demonstration of how to not trade. That should be the first lesson in trading that you need to learn and you need to master, and you need to, you're only going to learn through experience. So if you're a beginner or inexperienced trader, you're not going to know this type of stuff. You're going to learn it eventually down the line. This, you cannot trade. You're not going to make no money. You're not going to catch no quick wins. If you're a scalper and you know what you're doing, yeah, probably you would. But if you're a beginner and you don't know what you're doing, stay away from this. You see the market moving this slow? This candle should be next candle. It's not doing any of that. It's staying in this range. Now, I mean, we could possibly try and take a power of three trade, meaning power of three. If you're inexperienced, you probably don't know what this is, but power of three is pretty much consolidation, manipulation, distribution. So we could be consolidating to then manipulate the market, manipulate everybody out of their orders, and then manipulate people to think we're going lower, to then eventually either sweep liquidity and go higher or tap this fair value gap and go lower. That's my prediction. We could wait for it, but I don't think I'm going to take that gamble today. I think I'm just going to call it. Our funded accounts, our funded account, we're up $420 for the week. That's good. Remember, we need $53,000. We need $53,000, and we hit our targets. We hit our target for the account, and then we move on to the actual funded account. You can't don't ruin this chasing trades. You can easily evaporate all this profit in one day. In 30 minutes, you can evaporate this whole profit. Trust me, I learned the hard way. So we have $2,580 remaining that we need to create in order for us to hit the target, pass the account, and move on to the actual funded, where I can actually be making some real money. We'll start back at 50,000. I'd have to make $100 every day. Every trading day, I have to make $100 for 5 days. Doesn't have to be 5 in a row, but it has to be 5 days. Make $100, then you qualify for a payout. That payout could range from $500 to I think $1,500 for the first payout of this account balance. Not this current account balance. This is the eval account balance, but the funded account balance. I'm in the eval stage. I'm in the testing stage. They're pretty much testing me, see if I'm a good trader. If you pass the test, then you're rewarded an actual funded account. So we are up $420, and yeah, we will get back at it next week, and we will see how it goes. Looks like we kind of manipulated up here. I'm still not taking this because this is not an inverse. I don't see any inverses. That the volatility plays a big part of that. We should have, and then I'll take an inverse trade down, but we didn't do that. So, and I don't consider this manipulation either. Doing the hard thing is going to be the biggest confidence booster of your life. When you do the hard thing, it tells yourself, okay, I can handle this. It makes you feel good about yourself. It builds good habits. When you quickly fold from urges and easy temptations, it's not really going to make you feel good about yourself. Yeah, maybe the dopamine hit that you get from doing said thing will make you feel good in the moment. But all in all, in the grand scheme of things, your confidence is going to stay where it's at. or you just be building fake confidence. And that's not what we want to do. We want to build real confidence. Real confidence comes from um, challenge and challenge, going through a challenge, going through hardship. That's what builds real confidence. So yeah, we are moving way too slow, way too slow. Okay, I'm gonna call it. I'm gonna call it a video. This would be a psychology video. This would be a very important video. Just because I did not make money does not mean this is not a very, very important video. So please take note. Learn how to not trade. I'm gonna name this video "Learn How to Not Trade." When you see shit like this, and I'll give other examples of market uh, market data that you should not be trading in. I'll give more examples of that. But when you see consolidation like this, low volatility like this, when the price action is this choppy, this bad, you don't want to trade. Stay away. Stay away. All right, that's it. Calling it a video. See you guys.